Hi everyone, today we're going to talk about the mortgage lenders in Canada. Who are they and how do they operate? First off, there are three main categories of mortgage lender. There are the A lenders, they're also known as the prime lenders, and they do the bulk of mortgage lending in Canada. There are then the B lenders, also known as alt lenders, non-traditional lenders, non-conforming lenders. Still good lenders with good products, but mostly for customers who don't qualify for the products offered by the A lenders. And then there are the private lenders, and those are mortgage investment corporations and individuals that operate in the market as well. The A lenders and the B lenders are often referred to as institutional lenders. Those are the big financial institutions like banks or lending companies like the monoline lenders that operate in the mortgage space. The lowest mortgage rates in the market come from the A lenders, and the highest mortgage rates are offered by the private lenders. So who are these lenders? The institutional lenders, again, the A and the B lenders. The A lenders have the toughest underwriting criteria. They're the hardest ones to qualify for, but if you do, you get the best mortgage rates. They offer the lowest rates. They offer uninsured and insured mortgages, and the terms of the mortgages are usually most commonly between 1 and 10 years, with 5-year usually being the most common term. The types of lenders in this category are the banks, the big banks and mid-sized banks as well, credit unions, the monoline lenders, monoline meaning mortgages their only business, and insurance companies and trust companies. The B lenders have more flexible underwriting. For instance, they allow higher debt service ratios than the A lenders do. But for that higher degree of risk, they charge higher rates than the A lenders do. They also charge origination fees, usually between 1 and 2%, which adds to the cost of that loan. So you need to be aware of that if you're going to a B lender. Their terms are usually a little shorter than the A lenders. Their terms are most commonly 1 or 2 year mortgages, sometimes 3-year. And the lender categories here include small and mid-sized banks, and some of the monoline lenders also offer alternative or B lending products. The private lenders have much more flexible underwriting criteria. They'll take different risks on that the A and the B lenders won't. But for those incremental risks, again, they offer higher rates, often in the double digits. And they charge high origination fees. Sometimes you'll see fees as high as 5% for a private lender. They're often regional in focus. Sometimes they operate in only a certain segment of Ontario or Alberta or Nova Scotia or wherever their main practice is. And most tend to only lend in major urban centers. Because they're taking more risk, they're very concerned about the quality of the property and its liquidity, meaning how easy is it to sell the property if something goes wrong. They offer primarily 1-year mortgage terms, but sometimes 2 years as well. And you need to be aware if you're getting a private mortgage loan that there are no guarantees that that lender will offer you a mortgage renewal. So you must have an exit plan in place at the beginning of the loan so you know how to deal with that at the end. And the lender categories here include mortgage investment corporations, often called MICs, and private investors. So how do you find a good lender? Well, the first most important thing is, you can look around on the web and try to find who the lenders are, but use an experienced mortgage broker. The big experienced ones, they know the banks, they know the monolines, they know the B lenders. So they can find you a good lender no matter what credit category you fall into. You should always try to figure out if you can qualify for an A mortgage first. That's the best deal you'll find in the marketplace. And you should shop around for that. Don't just talk to your bank. The bank, if you qualify, will give you an A mortgage option, but you only ever see what they offer. And there are a lot of A lenders out there, if you qualify for A mortgages, who want your business. You need to know that. You need to know that there are dozens of lenders in this market that might make offers to you. So use an experienced broker to shop around so that you can find where that best deal is for you. Your loyalty to your own bank shouldn't cost you money. You should be able to find a good deal on the market. For B mortgages, they primarily only originate their mortgages through brokers. So to find a good B mortgage, you typically do have to go through a mortgage broker. So again, an experienced mortgage broker can really help here. And then private mortgages, same thing. They operate through mortgage brokers. And before you get into that, make sure you understand the cost, make sure you understand what all the fees are going to be. Have an exit plan for that mortgage so that when it matures in a year, you know what you're going to do, hopefully upgrade into a B mortgage or an A mortgage. and just do your homework before you go into a private mortgage. If you need advice on any of these types of mortgages or the lenders, or help trying to find a lender that's right for you, please contact us. You can call us on the number on the screen, find us on our website, frankmortgage.com, or even scan this QR code here and book an appointment directly with one of our agents. We're here to help you out. Thanks.